Hello, and thank you for joining me for today's Ready, Set, Retire Group 1 presentation. This presentation is intended for state employees hired before September 1st, 2009. State employees hired after September 1st, 2009 can find resources and videos on our website, ers.texas.gov, or register for a webinar that applies to your group. During the presentation, we won't answer account-specific questions, but we will address some of the most common questions that those looking to retire ask. Today's topics: your income at retirement, eligibility, service credit, ERS annuity, payment options, 3 steps to retirement, benefits at retirement, return to work retirees, and resources. Let's get started with your income at retirement. As you consider retirement, it's important to think about your financial position. Most financial advisors say you'll need about 80% of your pre-retirement income to comfortably maintain your current lifestyle after retirement. They give you your income at retirement as a three-legged stool. The three legs are your state of Texas retirement, your Social Security Administration benefits, and your personal savings such as the Texas Saver 401k or 457 program. All three legs together provide a stable income in retirement. If you're eligible to retire before you can start getting benefits from a personal savings account like Texas Saver or draw Social Security, you may need to supplement your income with a job if your ERS annuity alone isn't enough to cover your expenses. The first leg of your retirement stool is your ERS annuity. Your ERS annuity is paid to you for your lifetime. The average state employee retires with about 22 years of service and an average gross standard annuity amount of a little over $1,600 monthly. This equals about 53% of his or her salary, and that's not including taxes and other deductions. Your annuity is determined by your years of service and your highest average salary. The longer you work, the higher your annuity will be. Your annuity is paid the last business day of each month after you retire. You can create your own annuity estimate by logging into your ERS online account. Although there is no provision for regular cost of living adjustments, if the fund is actuarially sound, there's a possibility that retirees could receive a small additional payment. However, there is no guarantee, and we don't advise that you plan on such additional payments. In fact, ERS retirees haven't gotten a COLA or an additional retirement payment, sometimes called a 13 check, in almost 20 years, and we don't anticipate being able to provide either of those in the foreseeable future. The second leg of the three-legged stool is your Social Security Administration benefits. Your SSA benefits don't reduce your ERS annuity. The earliest you can draw your SSA benefit is age 62. This is considered early retirement under SSA standards. Contact the SSA to find out what age you can draw your maximum benefit. The third leg of the stool is personal savings. This includes a Texas Saver 401k and or 457 account, an individual retirement account, a personal savings account, or retirement accounts you may have from previous employers. Your personal savings play an important role in your financial stability at retirement. If you aren't already, you may want to consider investing in a Texas Saver 401k or 457 or some other type of retirement account. If you have a personal savings account like an IRA or a retirement account with a previous employer, you can contact a Texas Saver representative to see what your options are to maximize your benefits. Currently, there are 3 retirement groups, and the retirement eligibility rules are different for each group. The group you are in is determined by your first hire date. This presentation will focus on Group 1. Group 1, employees hired before September 1st, 2009. Group 2, employees hired on September 1st, 2009 through August 31st, 2013. Group 3, employees hired on September 1st, 2013 through August 31st, 2022. Please note, employees hired on or after September 1st, 2022 will be in Group 4. Information on Group 4 retirement eligibility and benefits will be available starting summer 2022. If you previously left state employment and withdrew your retirement contributions, then returned to state employment after September 1st, 2009, you may be in a different retirement group than Group 1. Withdrawing your retirement account removes you from your retirement group. Buying back your service credit helps your retirement eligibility in the amounts of your annuity but doesn't return you to your former group. If you left state employment and did not withdraw your retirement contributions, your original hire date will determine the retirement group you are in. Today's presentation, we will focus on Group 1 employees. Everyone wants to know, when will I be eligible for retirement? Let's take a look at the eligibility for members who were hired prior to September 1st, 2009. The Rule of 80 is a term you might be familiar with. It's one way to meet retirement eligibility. When your age plus your service credit equals 80, you've met the Rule of 80. If you meet the Rule of 80 and have at least 10 years of service credit with a state agency or higher education institution that participates in the Texas Employees Group Benefits Program at retirement, you'd be eligible for health insurance upon retirement. Here's an example of how you calculate Rule of 80. In this example, we have a member who is 59 years and 9 months of age and has 20 years and 3 months of service credit. Notice how the age and service is counted month for month. It is not rounded up or down. 59 years plus 20 years equals 79 years, and 9 months plus 3 months equals 1 year. So 79 years plus 1 year equals 80. Under the Rule of 80, this member would be eligible to retire with health insurance before they are 60 years old. Let's take a look at how Rule of 80 is calculated with a Group 1 member. Group 1 members are state employees hired before September 1st, 2009, and they have no age-based annuity reduction. Elva, a Group 1 employee, is 58 years old and has 22 years of state service. 58 plus 22 equals 80. Elva meets the Rule of 80 with no reduction to her annuity and is eligible for retiree insurance. To retire, you must meet retirement eligibility. If you don't meet the Rule of 80, you can retire without insurance benefits at age 60 with 5 years of service. If you don't meet the Rule of 80 but have at least 10 years of service, there is a minimum age requirement that must be met before you're eligible for your annuity and retiree health insurance. We'll talk about health insurance premiums later in the presentation. If you have at least 10 years of service and are at least age 60, you can retire and start drawing your monthly annuity. Your annuity will start the first of the month following your retirement date. However, you won't be eligible for state health insurance until age 65. We've learned how your years of service determine your retirement eligibility. Now let's learn about the different types of service credit. Earned service credit includes monthly service credit. For every month you work and make a contribution to your ERS retirement account, you earn a month of service credit. Teachers Retirement System. If you contributed to the Teachers Retirement System and didn't withdraw your account, you can transfer your service when you call to request your retirement with ERS. You will get one annuity check each month. Your TRS service won't show in your ERS account or on your annual statement of retirement benefits. You'll need to contact ERS if you'd like a retirement estimate that includes TRS service. If you withdrew your TRS account and are interested in buying back that service, you need to contact TRS about purchasing the service before you process your retirement with ERS. Proportionate Retirement Program. There are multiple systems like the Texas County and District Retirement System or Texas Municipal Retirement System that participate in the Proportionate Retirement Program, PRP. PRP service helps you meet the rule of 80 sooner, but it won't help increase your annuity. Your retirement check with ERS would be based on your ERS service credit. You will need to contact the system you worked for previously to find out if you're eligible for a retirement check from them or to reactivate your account. If you have worked for a PRP system, call ERS so we can certify your service. There's a full list of PRP systems on page 11 of the Planning Your Retirement booklet. Optional Retirement Program. The Optional Retirement Program, ORP, is an option for employees of higher education institutions who chose not to contribute to TRS. ORP service credit helps you meet the rule of 80 sooner and can be used towards insurance eligibility as long as you have an ORP account that you're eligible to draw an annuity from. Statute doesn't specify a dollar amount the ORP account must remain. ORP service credit won't help increase your annuity. Unused sick and annual leave. If you retire directly from state employment, you may be able to use leave balances towards your retirement and insurance eligibility. Service credit for unused sick and annual leave is calculated separately, and you need 160 hours to earn your first month of service credit. Any fraction over 160 hours is counted as a full month. Most agencies report your leave monthly to ERS. If so, it's reflected in your ERS account when you log in to create your own estimate. If you have a question about the amount of unused leave you've accrued, you need to talk with your HR department. ERS does not track your leave. We just take the information your agency sends us monthly and apply it to your annuity and, if applicable, eligibility calculations. Unused sick leave and annual leave can be used as service credit to help you meet the rule of 80 sooner and increase your annuity. There's no payout for unused sick leave, but for the payment of your unused annual leave, you have a few options. Lump sum payment, taxed up front, roll over your payout to your Texas Saver account to avoid the upfront tax, or roll over a portion and have a portion paid to you in a lump sum. You will be taxed on any lump sum amount paid to you. ERS doesn't handle the payout for unused leave. Contact your agency's benefits coordinators with any questions. Let's look at an example of how unused sick and annual leave can be used by a Group 1 retiree. In this example, Seth has 225 hours of sick leave and 75 hours of unused annual leave. 225 hours of unused sick leave is divided by 160 hours because 160 hours equals 1 month of service credit. This gives you 1.406, which rounds to 2. Any fraction over 160 hours is counted as a full month. Seth's 75 hours of unused annual leave is not enough for at least 1 month of service credit. Seth will receive 2 months of service credit at retirement that can be used to increase annuity and to meet retirement eligibility. He can get a lump sum payout of his annual leave from his agency. Purchasing service credit helps you increase your years of service, which may help to increase your annuity and/or retire sooner. You may have refunded service, time that you would have taken when you left state employment. Military service, if you served as an active duty member in the military. Waiting period service, depending on when you were hired, you may be subject to this time. And additional service credit, able to purchase once you have at least 10 years of actively contributing service. You can view the Purchasing Service Credit presentation on YouTube and the PDF version on ERS's website. Let's talk about your annuity in more detail. Remember, your annuity is a lifetime monthly payment and is paid on the last business day of the month. Let's discuss how your annuity is calculated. The formula is authorized by the Texas legislature. For regular service Group 1 employees, we multiply your highest average salary by your service percentage to get your gross standard annuity amount. Your highest average salary is the average of the highest 36 months of salary. Your monthly salary includes your base pay, longevity pay, and if applicable, hazardous duty and benefit replacement pay. Overtime pay, comp time pay, and one-time merit bonuses are not included when we calculate your highest average salary. To get your service percentage, we multiply your years and months of service by 2.3%. See page 31 for the service multiplier table for all retirement groups. Let's take a look at the example on the next slide. In this example, we have a member who has a highest average salary of $3,000 with 25 years of state service. We multiply 25 by 2.3% to get the service percentage, 57.5% or 0.575. We multiply the highest average salary of $3,000 by the 57.5%, and that gives us a gross standard monthly annuity amount of $1,725. Don't forget about deductions. Your annuity is taxable and therefore federal income taxes are deducted. If you retired as a part-time employee, are subject to tiered insurance premiums, or have dependents enrolled in GPP health insurance, the health insurance premiums and tobacco user premiums, if applicable, are deducted from your annuity payment. Also, monthly premiums for optional coverage like dental, vision, optional life insurance, or dependent life insurance are deducted from your annuity. You will not pay Social Security, also called FICA, or Medicare taxes on your annuity payment as it is not considered earned income wages. If a retiree returns to active employment anywhere, Social Security and Medicare taxes are deducted from his or her salary because that income is considered earned income wages. Think carefully about your retirement payment option and the income you will need for the rest of your life. After you retire, your retirement payment option cannot change unless your beneficiary dies before you, or if your beneficiary is your spouse, you get divorced. The standard annuity option pays you the highest monthly lifetime payment, but there is no monthly survivor payment. If there is a balance in your retirement account after your death, it is paid to your beneficiary in a one-time lump sum. You can choose one or more beneficiaries. Survivor options 1, 2, and 5 permanently lower your monthly payment and your beneficiary receives a percentage of your gross annuity each month for their lifetime. With these three options, you can choose only one beneficiary. Option 1 pays your beneficiary 100%, Option 2 50%, and Option 5 75% of your gross annuity check. If you choose Option 1 or 5 and your beneficiary isn't your spouse, there may be an age-based reduction to the percentage your beneficiary receives. With these three options, if your beneficiary dies before you, your annuity would increase to the standard annuity amount for the rest of your life. You wouldn't have the option to add a new beneficiary. Survivor options 3 and 4 work differently. Your lifetime annuity is still reduced, but your beneficiary is paid only if you die in the first 5 years of your retirement, option 3, or the first 10 years, option 4. With both of these options, you can choose more than one beneficiary. With option 3, your beneficiary would receive the remainder of 60 monthly payments, and with option 4, your beneficiary receives the remainder of 120 monthly payments. You have the option to take up to 36 months of your standard annuity payment as a one-time payment at retirement. This is called a partial lump sum option. If you take a PLSO, your monthly annuity will be permanently reduced. If it's paid directly to you, it would be taxed at 20%. If you retire from state employment younger than age 55, you may have an additional 10% penalty when you file your taxes. You can choose to roll over all or some of your PLSO to a Texas Saver 401k or 457 plan account or a personal pre-tax account. PLSO payments are usually paid about 5 business days after your first retirement check. Your decision to take or not take a PLSO can't be changed once you have retired. Now that we've talked about retirement eligibility and your ERS annuity, let's discuss the 3 steps that you must take to apply and process for retirement with ERS. First is to create estimates online. Then call ERS within a month or 2 of your planned retirement date to process. And then the final step is returning the documents to ERS. Remember, your documents must be postmarked by your retirement date. Otherwise, your retirement request won't be processed. Your retirement packet will have instructions explaining what documents you need to submit to complete the retirement process. Please make sure to tell your agency you're retiring. ERS does not do this for you. There is a PDF version of our 3 steps to retirement presentation on the ERS website. You can also view the recorded presentation on YouTube. Benefits at retirement. The state currently provides valuable benefits to retirees just as it does for active employees. It's important to understand, however, that health and/or other insurance benefits for employees and retirees are subject to change based on available state funding. The Texas legislature sets the level of funding for such benefits and has no continuing obligation to provide those benefits beyond each fiscal year. Currently, if you are eligible for retiree health insurance, the state pays at least part of your monthly health insurance premium. How much the state pays depends on when you started working for an agency or institution that participates in the Texas Employees Group Benefits Program, how long you worked at a participating agency and/or institution, and whether you retired from full-time or part-time employment. Currently, the state pays the following for retirees who worked full-time their last 3 months of state agency or institution employment. 100% if you had worked at least 5 years at a GBP participating agency or institution in a benefits eligible position on or before September 1st, 2014, or if you have at least 20 years of service. 75% if you have 15 years to 19 years 11 months of service. 50% if you have 10 years to 14 years 11 months of service. The state pays half these amounts for retirees who worked part-time before retirement. After your retirement has been processed, you'll receive a retiree insurance enrollment statement that lists coverage you are enrolled in and all of your options. You'll have 30 days after your retirement date to elect or make changes to health insurance. If you are eligible based on your years of service and retiring as a full-time employee, the state pays 100% of your health insurance premium and half of your dependents premium. If you are a part-time employee for the last 3 consecutive months before your retirement date, the state pays 50% of your health insurance premium and 25% of your dependents premium. Your health insurance includes prescription drug benefits. Basic term life insurance. Your life insurance coverage would drop from $5,000 of coverage to $2,500. The state pays this premium for those retiring from full-time employment. Optional benefits. Dental. The GBP dental plans include a PPO, Preferred Provider Organization option, and an HMO, Health Maintenance Organization option for you and your eligible dependents. Vision. You can choose the State of Texas Vision Plan for you and your eligible dependents. Optional term life. If you retire as a contributing member and already enrolled in election 1 or 2, your election carries over into retirement. Elections 3 and 4 would reduce to election 2. In addition, there's no voluntary accidental death and dismemberment with the optional term life insurance at retirement. If you retire as a non-contributing member, you'd have the option to enroll in the $10,000 fixed optional life. You'd be required to submit an evidence of insurability application and must be approved for the coverage. Dependent term life insurance. The coverage amount drops from $5,000 to $2,500 with no AD&D clause. TextFlex. You won't be able to enroll in TextFlex as a retiree, but if you're enrolled in TextFlex at the time of your retirement, you can continue participating through COBRA through the end of the plan year. However, you'll have to make your contributions directly to ERS with a check or money order, which would be after-tax funds. You have the option to stop enrollment in TextFlex during summer enrollment prior to your retirement date. Also, if you are a participant of the Texas Saver 401k 457 program, you can still access services after you retire, but won't be able to contribute to your account. Medicare and your state health insurance. Once you are retired, you'll want to sign up for Medicare Part A and Part B about 2 or 3 months before your 65th birthday or when you're first eligible due to a disability. It's important to sign up for Medicare because your state coverage won't be primary once you're retired and 65. After you have received your Medicare card, provide ERS with your Medicare information so we can enroll you in Help Select Medicare Advantage and Help Select Medicare RX. You can choose to opt out of the Help Select Medicare Advantage and keep Help Select Secondary, but remember this benefit will pay secondary to Medicare. If you plan to work past the age of 65, you don't have to sign up for Part B until you retire. It's a good idea to contact Medicare and let them know if you aren't signing up for Part B because you're still working. Once you decide you are ready to retire, contact Medicare about 2 or 3 months before your retirement date and sign up for Medicare Part B. ERS conducts Medicare preparation webinars and seminars throughout the year. Please visit our ERS events calendar on our website for dates. Depending on your lifestyle and family needs, you might want to return to work after retirement. There is no waiting period if you're returning to a private sector job. If you plan to return to work with the state, you must be retired for at least 90 days and cannot have a prior agreement with your employer to return to your job. Retirees who return to work for the state can elect active employee benefits. This will allow them to enroll in Texas Income Protection Plan, disability insurance, TextFlex, and life insurance options that aren't available to retirees. They can't enroll in or remain enrolled in a Medicare Advantage plan, which includes prescription drug coverage through Help Select Medicare RX. Please note, if you choose active employee benefits once you leave state employment again, your optional term life insurance will be based on the new salary and will not return to the salary you had when you initially retired. For example, if you retire with an annual salary of $48,000 and return to work with a new employee annual salary of $32,000, your optional term life insurance coverage amount will be based on the new employee annual salary amount. When you end your state employment, you'll be switched back to retiree benefits, and your optional term life coverage amount will be based on the most current salary of $32,000, not the $48,000. Talk to your benefits coordinator about your options if you return to work for the state. Once you return to work, you will continue to receive your monthly annuity payment while receiving your employee paycheck. Depending on if you choose active benefits or keep retiree level benefits, will determine if your insurance benefits are taken from your retirement check or your active check. You can continue to use the discount purchase program in retirement. Shop online and buy products and services such as computers, appliances, vacation packages, and more at discounted prices. You can visit ers.savings.bennyplace.com and click the Retirees button. To access the offers, you'll need to complete a simple registration step. On the Discount Purchase Program homepage, enter the personal email address ERS has on file and create a password. You'll receive a confirmation email to complete your registration. If you already signed up for the program as an active employee, you'll want to re-register after you've retired using your personal email. It's quick and easy. Just start shopping and save. You have many resources to help you manage your benefits. Let's talk through a few of them. You can speak to your benefits coordinator about your current benefits. You can visit the ERS website and access your ERS online account where you can update beneficiaries, estimate your annuity amount, and update personal information. On the ERS website, you can also access different retirement information like the Planning Your Retirement booklet, information about the insurance benefits in retirement, and retirement videos that help to prepare you for the big day. You can also speak to retirement representatives by calling us toll free at 877-275-4377, Monday through Friday, 8 a.m. to 5 p.m. Central Time. You can also view this presentation on our YouTube channel as well as other retirement videos to give you useful information to prepare you for retirement. You can view the ERS Facebook page to read posts from plan administrators or let us know how an event you attended went. Thank you for listening today. We hope this information has been helpful.